Yo, it is 8:44 a.m. Pacific Daylight Time. It's the 18th day of May, 2026. This is episode 1323 of Bitcoin, and it's Bitcoin Pizza Week. This entire week is going to be nothing but Bitcoin Pizza Day, right? And if you're kind of confused, it ends up being May the 22nd. So Thursday, we're looking at the actual day that, what was his name? Lorenzo Heinix. I never really can remember how to pronounce his name. Bought what is considered the very first purchase with Bitcoin, which I call complete bullshit on. However, he did purchase a couple of pizzas from Papa John's. So if you're confused as to why people are going nutso about pizza this week, that's why. I distinctly remember it being a pair of alpaca socks that was the first known purchase of a thing directly with Bitcoin. But hey, you know, the past is a little fuzzy for me. Anyway, it's all the news that you can use with me, your host, David Bennett, here on the Bitcoin and podcast. We're going to start with this report talking about Iran and this insurance scheme. I don't know, man. I'm not all that sold on it, but it is what it is. Claude Mythos looks like it may have found an exploit in Apple. And while Mythos hasn't been released to the general public, it has been released to a select few people. And apparently some of those select few people found a select exploit in the Apple M5 chip. That should be all kinds of fun. And then Bernstein has some words to say about what the Clarity Act is going to give Circle, you know, the guys behind USDC stablecoin. And I've noticed over the weekend over on Nostr that something happened. Somebody developed something that's pissing a lot of people off, and we're going to talk all about that. Then in the second part of the show, Strategy buys Bitcoin, of course. And so does Mubadala from Abu Dhabi, but they didn't really buy Bitcoin directly. It's more about ETFs. And then a crypto ATM operator going bankrupt. And I'm going to say it now, and I'll probably say it again when we do the story. I think it's a little early for Bitcoin ATMs. I've always thought this. It's not that I think they're bad or good. I'm indifferent about it. I just think, I don't think crypto ATMs or Bitcoin ATMs were really a good idea yet. They will be. But I think that entire segment of the industry, I don't think it's going to do real well for the next 5 years, maybe. That's just a guess. But anyway, yeah, there's that. And ChatGPT and your bank account. Don't let this shit happen to you. Let's go back to Iran. Braden Lindria out of Cointelegraph starts us off today. Reports suggest Iran is mulling a Hormuz insurance scheme paid in Bitcoin. Iran is reportedly considering a plan to exercise control over the Strait of Hormuz through an insurance-based model, with some speculating based on an unverified website that it could be paid in Bitcoin. On Saturday, Fars news agency, an Iranian news outlet closely affiliated with the Islamic Revolutionary Guard Corps, reported that the Iranian Ministry of Economic Affairs plans to manage the Strait of Hormuz through insurance, citing a state document it obtained. However, other reports say Iran is looking to take payments for the insurance in Bitcoin through a website called Hormuz Safe, with a widely circulated screenshot of the purported site selling secure digital insurance for maritime cargo. Control over the Strait of Hormuz has been the leading issue in the Iran-U.S. war. The shipping lane handles about 1/5 of the global oil trade, and many ships have been prevented from transiting the strait after the U.S. started launching airstrikes in Iran late February. Media reports state that Iran collected its first revenue from tolls imposed on ships transiting the strait last month. Prior to the U.S.-Iran war, no such measures were in place. Fars News said the insurance platform seeks to distinguish between transit vessels from different countries. Quote, under the Economy Ministry's plan, managing the strait through an insurance framework would enable the issuance of various marine insurance policies as well as certificates of financial responsibility, Fars News said, adding that it could generate over $10 billion in revenue for the country. There's no guarantee that Iran will go ahead with the insurance proposal, and the website purporting to offer Iranian digital insurance could be fake. The website was down at the time of writing. Scammers have previously defrauded shipping companies operating in the Strait of Hormuz by demanding payment in cryptocurrency for safe passage. Demanding insurance payments in Bitcoin could make sense, given that U.S. authorities froze $344 million worth of USDT, that's Tether, tied to Iran last month. Earlier reports said Iran had been accepting oil tolls in U.S. dollar-denominated stablecoins such as Tether, as well as Bitcoin and fiat currencies such as the Chinese yuan, with USDT reportedly the preferred cryptocurrency. Industry leaders have touted Bitcoin as a more appropriate cryptocurrency for sanctioned countries because it is sufficiently decentralized and has no issuer capable of freezing funds. In early April, a spokesperson for Iran's oil, gas, and petrochemical products exporters union said certain ships would be able to pass through the strait provided they pay a tariff. A tariff? You mean a toll of $1 per barrel of oil in Bitcoin. Quote, once the email arrives and Iran completes its assessment, vessels are given a few seconds to pay in Bitcoin, ensuring they can't be traced or confiscated due to sanctions, they said at the time. Okay, so that's where we're at right now. So at least Cointelegraph is being cautious about it because I'm seeing nothing but, oh my God, Iran's done it. They're taking nothing but Bitcoin for safe travel through the Strait of Hormuz, which brings up a couple of questions. How the hell is this insurance? Insurance against what? And then, I'm sure somebody out there is saying, well, from being bombed, of course. Yeah, but if the insurance is written by Iran, it wouldn't be in Iran's best interest to bomb the ship because they've got to pay out the insurance claim. So that doesn't wash, right? So that's not it. So what else why would they call it insurance? And I really have I can't really reach for any other description than straight up organized crime. I mean, I'm not all about bombing brown people back into the Stone Age, but it ain't exactly like Iran's regime is all cuddly. They're not exactly the nicest people on the planet. No, the Iranian people are probably just fine. I've met one, but that was over here in the United States. I've never been to Iran, so I'm not going to say anything bad about their people. They're probably like the rest of the world. They just want to get married, have babies, go fishing, or whatever. No, it's the regimes. It's these governments. They're whatever you want to call them. They're the people that suck, and they pretty much all suck in every country in the world. But that said, this sounds like just a shakedown. Hey, that's a nice ship you got there. It'd be a real shame if we blew a hole in it. How about you buy here some of our insurance and we won't be blowing holes in your nice, pretty little boat? Calling it insurance is one of the reasons why I'm looking at this going, I don't know if I believe this. There's something about this that just feels like it's either trolling or it's just straight up, God, I was about to say disinformation, straight up lies. Written by somebody who either wants to act like they're Iranian or wants to piss off the Iranians. Nobody really knows if this is true yet. Because it's just really Fars News Agency, and I think like the Kurdistan Times or something like that was reporting on it. and maybe Al Jazeera said a word or two about it, but I haven't seen it hit anything that would be remotely considered mainstream media. Not that that can be trusted. It's just one of those things that's sort of like a barometer as to, well, so many people believe this that now it's on CNN. Okay, well, I could deal with that better than I can deal with the FARS news agency. So as far as this Iranian thing, this Hormuz safe program, and only taking Bitcoin, at this point, we better take it with a grain of salt. Just saying. Okay, so Claude Mythos. Hold on for a second. I got to get some coffee. Ah, that's good coffee. Exploit on Apple M5 developed in less than a week. Atlas 21 gives us the lowdown. Vietnamese startup Caliph claims to have developed the first public Mac OS kernel memory corruption exploit capable of surviving the new memory integrity enforcement protections on Apple M5 hardware. The announcement was published in a Substack post on Thursday and states that a small team of researchers completed the work in less than a week with assistance from a preview version of Anthropic's Claude Mythos. According to Caliph, the attack path was discovered accidentally on April the 25th when researchers identified the bugs before developing a working exploit by May the 1st. The exploit chain targets Mac OS 26 running on Apple M5 systems, starting from an unprivileged local user account and escalating to root access via standard system calls. Holy shit, that's not good, dude. The exploit combines two vulnerabilities and additional techniques targeting M5 bare metal hardware with the MIE kernel enabled. Caliph shared its findings with Apple in a meeting at the company's California headquarters. Claude Mythos Preview helped identify the vulnerabilities and provide assistance throughout exploit development, though Caliph emphasizes that human expertise remained necessary to bypass MIE protections. Quote, "Part of our motivation was to test what is possible when the best models are paired with experts," the company wrote. Quote, "Building a kernel memory corruption exploit against best-in-class protections in a single week is noteworthy, and it says something loud about this pairing." Anthropic released the Mythos preview version in April following internal testing and external evaluations indicating that the model is capable of autonomously identifying and exploiting software vulnerabilities at a level beyond previous public AI models. Rather than making it publicly available, Anthropic restricted access to select technology companies, banks, and researchers as part of its Project Glasswing initiative. And that same month, it emerged that the U.S. National Security Agency was indeed using Mythos. Mozilla subsequently reported that Mythos identified 271 vulnerabilities in Firefox during initial testing. Okay, so M5 hardware at bare metal with an unprivileged account can go all the way to root access. There's a lot of M5s out there. Just saying. But here's my question. So it says that Anthropic released the preview version in April, and they only made it available to select technology companies, banks, and researchers as part of Project Glasswing. So how the hell does a Vietnamese startup get a hold of Mythos preview? That's a question. I mean, maybe this particular startup is not small. Maybe they were, I don't know, so best in class that they were able to pull down hundreds of millions of dollars in their first round financing moves. I don't know. But it just seems strange that, this huge, massive company would let a startup company get a hold of this, what people are saying is going to be the end all be all of the internet and all things computer, because it's just going to destroy everything, which I don't buy it. I don't think it's not powerful. I think Mythos is probably fairly powerful, but I'm still wondering if this isn't more of a marketing scheme than anything else. We'll find out more as time goes on, and when I find out more, I promise you'll find out more. Okay, so I want to talk about Bernstein. They're saying the Clarity Act yield compromise cements Circle's edge amid record stablecoin supply. This is out of the block. Naga Avan Nomeo is writing it. U.S. policymakers advanced the Clarity Act in a 15-9 markup vote on May the 14th, clearing a critical legislative threshold with bipartisan compromise language on stablecoin yield that Bernstein analysts argue structurally favors Circle Internet Group. The compromise prohibits issuers from paying interest that is economically or functionally equivalent to a bank deposit on passive stablecoin balances, while explicitly preserving rewards tied to bona fide activities like trading, payments, and other usage-driven incentives. Notably, Circle does not directly offer passive yield on USDC balances, with partners such as Coinbase instead using distribution arrangements and reward programs tied to USDC usage. Bernstein reads the language as protecting those activity-based and distribution-linked incentive structures underpinning USDC's growth. It also forecloses the yield pass-through arms race that had been a persistent investor concern, thereby allowing less liquid issuers to gain share by simply outbidding on rates. The analyst led by Gutham Chugani argued in a Monday note to clients. And by cementing stablecoins as payment instruments rather than deposit substitutes, the legislation protects the durability of Circle's float income model, the firm said. Bernstein carries an outperform rating and a $190 price target on Circle, ticker CRCL if you want to know, which closed at $114 on May the 15th, implying roughly 67% upside from current levels. Coinbase also holds an outperform rating with a $330 target against a $195 close. The market data running in the background has moved sharply. Total dollar-backed stablecoin supply reached an all-time high of over $300 billion as of Monday, with Tether's USDT commanding the lion's share and USDC holding second place. The two together account for roughly 97% of supply, despite increasing competition, according to the block's data. In terms of transaction volumes, the shift is even steeper. Adjusted stablecoin volumes, stripped of bot activity, however the hell they're stripping bot activity, I don't know, but that's what they say. It's tracking at $15 trillion monthly based on April data. So transaction volumes, wow, $15 trillion monthly based on April data, up from approximately $11 trillion in 2025. Ladies and gentlemen, I'm not buying it. I may be wrong, but I think that number's a little high. But total volumes on an annualized basis are running at 100 trillion. That was double last year's 55 trillion. And USDC's share of adjusted volumes has climbed from 41 to 60% year over year, driven by gains in spot trading and wallet-to-wallet transactions per Bernstein's analysis of Visa on-chain data. However, the agentic payments layer is where Bernstein sees the longer-range upside compounding. Circle has built out a full agent stack covering permissionless multi-chain wallets, gas-free USDC transfers as small as like several hundredths of a penny. Thousands, maybe 10,000ths. It's like a very, 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 very low amount of money. But in an agent marketplace for service discovery, a unified command line interface for wallet provisioning and transaction integration are set. The X402 protocol has accumulated 112 million cumulative transactions and $16 million in cumulative payment volumes since launch in May of 2025. USDC currently handles more than 99% of all X402-based agentic payments globally. Coinbase has also been building on the same X402 infrastructure. The protocol has since moved into the Linux Foundation with governance contributions from Cloudflare, AWS, Stripe, Shopify, and Google. Circle's Arc blockchain, built for institutional payments and integrated with its agentic stack, has processed 244 million cumulative testnet transactions since its own October 2025 launch, with 1.6 million unique wallets transacting in the first quarter alone. The ARC token presale raised $222 million at a $3 billion fully diluted network value from investors, including A16Z Crypto, Apollo Funds, ARK Invest, and BlackRock. The block previously reported that Bernstein maintained its $190 circle price target as the ARK presale cushion near-term rate pressure. ARK features USDC as native gas and what Bernstein described as quantum-ready architecture, complementary features that should propel Circle's position under a clarified regulatory regime, according to Bernstein. It is important to note that 3 legislative stages remain before the Clarity Act becomes law, despite last week's markup passage. The Senate Banking Committee's version must first be merged with the parallel Senate Agricultural Committee bill into one unified text. That merged bill then requires 60 votes to clear the full Senate floor. The House passed its own version of the Clarity Act back in July 2025, and it must also reconcile its text with whatever emerges from the Senate. Polymarket currently puts the odds of passage in 2026 at 62%. Optimism on prediction markets echoes a bullish outlook from industry bigwigs like Coinbase CLO Paul Grewal, who expects the bill to pass this summer. However, not everyone is convinced, as GSR Chief Legal and Strategy Officer Joshua Reisman sees but a 50-50% chance. So my take on this is that Tether, if they want to remain relevant, better get on the stick. I honestly did not think that Circle would be in a position where they could actually be a threat, a real threat to Tether, because the guys at Tether had years. They were the ones that developed stablecoin. And yet Tether seems to be taking a back seat to this rise of Circle. And I will say it again. I don't want Jeremy Allaire with any kind of power whatsoever. He's not a friend of Bitcoin. He's like Brian Armstrong. They both signed their name to the New York Agreement. They both have it in for Bitcoin. I have no idea why, considering they wouldn't have anywhere close to the amount of money that they have today if it weren't for the advent of Bitcoin. But a long time ago, I kind of stopped trying to figure people out, man. They just do weird shit. And I'm pretty sure it all boils down to the fact that they don't care about Bitcoin because they really only care about gathering up as much fiat currency as they can, because they still believe the old story that that's what wealth is. And as long as you believe the old story of what wealth is, you're always destined to be a dick. It doesn't mean that you can't have a house. I'm not saying that. I'm also not saying that you shouldn't have like any kind of money in a bank account. But this relentless drive to get as much fiat currency as you possibly can, Bitcoin be damned. That's not why we're supposed to be here. I'm just saying is these guys need to get their have a little bit of a moral check-in with life, as it were. Okay, so it is the Circle P segment. The Circle P is where I bring plebs just like you with goods and services, to plebs just like you who want to buy those goods and services. But you will be buying it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. However, the people that I want to talk about today, they don't offer a product that I can sell. In fact, they're sort of part of the same movement that the Circle P is part of, which is why I want to talk a little bit about something called Galaxy Mind. GalaxyMind.space, not .com, .space. GalaxyMind, M-I-N-D, .space. They've got 103 vendors powering Bitcoin adoption, is what they say. And they sent me a blurb because I told them I wanted to put them into the Circle P so that other people would know about GalaxyMind.space. GalaxyMind is a free set of Bitcoin tools. No accounts, no KYC, no tracking. The core of it is a community-submitted directory of more than 100 merchants in around 19 countries who take Bitcoin for physical goods. So the focus is on spending sats, not just stacking. It also has a buyer gauge that reads 10 market signals to answer whether now is a decent time to buy, with a 7-day forecast. A float tracker that estimates how much BTC is realistically still available to buy. A scoreboard comparing the Bitcoin treasury companies like Strategy, Metaplanet 21, and Strive on the same MNAV basis, and an allocation tool for Bitcoin adjacent securities. The data is timestamped and the methodology is public, so you can check the math for yourself. It's free to use and free to embed on your own site. So the real gist of this thing is that it is, if you go to galaxymind.space, it's a way for you to spend your Bitcoin with merchants who accept Bitcoin for their goods and services. They got like categories, like there's 16 companies for apparel, there's 24 companies for mining and hardware, there's 26 in consumables, there's 17 in collectibles and 3D, 13 in services. You get the drift. But you can also look by country. United Kingdom's in there, Australia's in there. You can push these buttons as like little filters so that you can find as quickly as you can what it is that you may want to buy. Now, this buying gauge thing seems a little interesting. I'm on it right now. It says the Bitcoin buying gauge. Should you buy Bitcoin right now? And then it talks about those 10 market signals. And right now, we are just a little bit above the buy signal. We are at 75 out of 100, and the buy signal looks to be around 70. So it's an interesting way to say, wait a minute, hold on. If this is a good time to buy Bitcoin, is it also a good time to spend Bitcoin with these 103 different vendors that are accepting Bitcoin for their goods and services? Like, I want to go over to apparel. And as you might imagine, Panties for Bitcoin is here, and Leathermint is here, and FOMO21 is here. The Bullish Bitcoiner is here. Let's see what the Bullish Bitcoiner has for sale. Bitcoin and Nostr apparel and merch. And let's see more. Let's see where this goes. Oh, it doesn't go anywhere. Okay, never mind. Oh, I got to visit the shop. This one is mx12.art. So each one of these vendors, it looks like they can put a place where you can go directly to their own website to shop, or whatever URL they want to redirect you to. But yeah, so I can go over here to mx12art, mx12.art, and look at some apparel that this Bitcoin artist is making, and it looks like I can buy it directly from his site. So my point is, the Circle P is doing its part to try to get a circular economy in Bitcoin going. And I'm not alone. There's several people that are doing this. And you might say, why the hell are you advertising for a competitor like Galaxy Mind? Galaxy Mind, while they may be technically considered competition, is still somebody I want to spotlight so that you guys know that galaxymind.space is on the same mission that the Circle P is on. But that mission is not this next mission. I think it was Saturday. I kind of walked into Nostr and I'm like, why is everybody bitching and moaning? And sure enough, there was a big old fight on everybody's hands. And it was basically has something to do with on-chain zaps. And it took me a while to figure out, but this seems to be Vitor and Alex Gleason, UTXO, the webmaster, maybe, and I'm not sure who's developing what or who did it, but there seems to be a certain group of people that are advocating for it. And UTXO, the webmaster, if you're listening and I got that wrong, you're not advocating for it. It doesn't matter. Look, the fight is this. So it looks like Alex Gleason enabled in his Nostr client named Ditto, Ditto, the ability to zap another user, but do it on chain. And the way that this is done is that basically your npub has a wallet address, whether you wanted it to or not. And I think that's the main sticking point because Alex zapped me on chain $5. It has, as far as anybody can tell, my npub now is connected to Alex Gleason because we know each other, and on chain, my npub looks like it's represented in that transaction because that's part of the address. Now, exactly the mechanics, I'm not sure, but this is not a Lightning wallet zap. So now I have a choice. I need to figure out a way to go get that $5. And if I do, I'm essentially confirming beyond all shadow of a doubt that this is kind of my npub and that this npub is active and that, yes, I took $5 in Bitcoin off chain at this time on this date, and that address received it at some time on some date. And there are many people that are really, really angry about this, and I can understand that side. But I can also understand the side of it's kind of cool. Yes, I understand that it's got serious implications for privacy and security. And I get that. But there were some people that were like saying this is going to break Bitcoin. Dude, if something like this can break Bitcoin, Bitcoin deserves to be broken. And I know that sounds an anathema to what I talk about all the time, but if something is simple as Alex Gleason figuring out that an npub could also be a wallet address on chain for Bitcoin and not using a side chain, not using Lightning, not using some kind of federated hoobly-ha like Liquid or something like that. No. This is on-chain Bitcoin. And somehow or another, he figured out a way to make your npub an actual wallet address and can zap directly to it on-chain. This also causes another problem, and that would be dust, because it may one of these days cost me more than $5 to get that $5 out of that wallet. But you know what is not true here? My npub wallet address has absolutely nothing to do with the wallet address that I spun up with my cold card. My cold storage has never seen my npub, and it doesn't need to. The npub address that Alex Gleason spun up is only connected to my Nostr wallet or to my Nostr npub. And so from that standpoint, it's not as concerning to me, but there is this matter of dust. There is this matter of privacy. There is this matter of later on down the line, is somebody going to know that I made a donation or I took a donation, blah, 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 blah. However you want to spin that. Use your imagination to figure out what kind of terrible shit could possibly happen if somebody found out that somebody gave you $10 in Bitcoin on chain through your npub. I honestly don't think this is all that bad. I do understand both sides of the argument. but I'm coming away with this. How fucking incredible is it that it just so happens that you can use your NPub as a wallet address on chain for Bitcoin without a whole lot of stuff going on in the background to make that happen? It seems to just act almost natively. I personally think that that kind of experimentation, that level of experimentation, for me, it's welcome. Let's run the numbers. CNBC futures and commodities. And by the way, if you hear like chainsaws ripping outside, there's nothing I can do about it. Neighbors are having some trees taken down, and I got to get this done. I'm hoping that it's not too terribly bothersome for you. It seems that shit is not settled in the Strait of Hormuz at all. We have no idea what the hell's going on with this war in Iran, if it's even a war. Nobody knows nothing. Except Brent North Sea is up 1.7%. We can say that. $111.22 a barrel. West Texas Intermediate up 1.7 to 107.23. Natural gas up 1.8% to just over $3 per thousand cubic feet. And gasoline is up 1 2/3 of a point to 3.76 per gallon. Murban crude, however, is actually down 1.5% to $106.03 or 30 cents a barrel. Metals are not doing well today. Neither is Bitcoin, by the way. Palladium is down a third. Gold is down a third as well, $4,544.08. Platinum is down 0.8%. Silver is down 0.75 of a point to 76.97, and copper is up a third. Ag is mostly in the green today, but the biggest loser is chocolate by a margin too, man. 6% to the downside. Biggest winner is going to be corn. 4.5% to the upside. Live cattle moving sideways. Lean hogs down a third. Feeder cattle down 2/3. The S&P is down almost a half. The NASDAQ is down 1 full point. The Dow is in the green, but essentially sideways. And the S&P Mini is also sideways, but slightly in the red. And then there's Bitcoin. At 76,420, we are now back to where we were a week and a half ago. $1.53 trillion in market cap, and we can only purchase 16.8 ounces of shiny metal rocks with our one Bitcoin, of which there are 20,030,910 and 1/2 of. Average fees per block are nominal. It's about 45 blocks carrying 90,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte. Low priority will get you in at 0.6. Hash rate has fallen to 954 exahashes per second, but still that's more security than I would know what to do with. And from the Jack Spirko interview, actually, I don't want to do this one. I guess I should explain that. Hold on for a second. Let me get back to a stretch sketch where I do have some boosts from people that were listening to last Friday's show. Before I begin, I did release an old interview that I did with Jack Spirko on Sunday. You know, it's like every once in a while, I just want to re-release some of the interviews that I've done in the past. And I figure if I'm going to do that, I'm going to do them on like a Sunday. And, you know, there may be a day that I do a special show on a Saturday. I'm not sure. But if you're wondering why the hell I dropped something yesterday, that's why. It's a good interview. He's got some good things to say. I honestly think it's rather evergreen because we're talking about how Bitcoin fits into the philosophy of things like permaculture and edge effect and whatnot. And he was one of the very first people that I ever interviewed for this show. So I thought I'd do a little bit of a blast from the past, but nobody's boosted it. But they did boost Stretch Sketch, which was Friday's episode of Bitcoin, and Nick Dose with a very long row of sticks. 11,111. It's also a palindrome boost. It says, had a Bitcoin burger and tallow fries at Steak and Shake today. Paid with Lightning. Quick and easy. And they gave me $5 in Bitcoin back at bitcoinmealdeal.com. Interesting. Bitcoinmealdeal.com. Hold on for a sec. I gotta look at that. I'm just gonna take a look at that website. See if it no, it didn't do it for me. Hold on. Bitcoinmealdeal.com. Let's see where it goes. Yep, it's Steak and Shake. So bitcoinmealdeal.com is it's branded as with Fold and with Steak and Shake, and it says, oh, okay, so this is more Fold than it is Steak and Shake. It says Fold makes your Steak and Shake burger more rewarding. Buy a qualifying Steak and Shake Bitcoin meal or Bitcoin steak burger and get $5 in Bitcoin from Fold, the easiest way to turn your everyday spending into earning Bitcoin. Interesting. So they've partnered with Steak and Shake. Okay, I get it. It's kind of cool. Kind of cool. Jay with 8,400 sats. Wow, dude. Thank you both, Nick, Dose, and Jay. He says, thank you, sir. And I say, thank you right back. Jason High with 250 says, boost. Nick Dose with 214 says, cheers. And that's the weather report. Welcome to part 2 of the news that you can use. Strategy spends a massive $2 billion to buy more Bitcoin. And it really didn't do much for the price. Saylor keeps buying Bitcoin in the middle of the week when he should know to wait until Friday and buy through Saturday and Sunday if he possibly could. And I don't see why he wouldn't be able to. I can buy Bitcoin on Sunday. Why can't Michael Saylor buy Bitcoin on Sunday? And here's the reason why. This is out of Bitcoin Magazine. Strategy announced Monday that it had acquired an additional 24,869 Bitcoin for approximately $2 billion, averaging roughly $80,985 per coin. See, he was buying this shit on Tuesday when he should have waited until Friday at minimum. And yet, Saylor never listens to me. He pushed the firm's total holdings to 843,738 Bitcoin. The disclosure came, as usual, via Form 8K filing with the SEC. The purchase marks a significant acceleration, an acceleration, not a deceleration, a significant acceleration from Strategy's most recent disclosed buy of a mere 535 Bitcoin for $43 million. That had raised questions among investors about whether the firm was pulling back on its aggressive accumulation pace. With the latest tranche, Strategy has now acquired a cumulative 843,738 Bitcoin at an aggregate cost of $63.87 billion, translating to an average price of roughly $75,700 per Bitcoin. So there you go. They bought more Bitcoin. There's really not much else to say other than he bought a lot of Bitcoin. He just did it on the wrong damn day. All right. Also from Micah Zimmerman, Bitcoin Magazine, Abu Dhabi's Mubadala raises Bitcoin ETF stake 16% to $566 million in the first quarter of this year. Abu Dhabi's sovereign wealth fund, Mubadala Investment Company, has raised its position in BlackRock's iShares Bitcoin Trust, reporting ownership of 14.7 million shares valued at $565.6 million as of March 31st, according to a 13F filing. This marks a 16% increase from the 12.7 million shares that the fund held at the end of the fourth quarter 2025. The disclosure extends a now unbroken accumulation streak that began in the fourth quarter of 2024 when Mubadala first disclosed Bitcoin exposure that was worth at least $436 million. The fund added shares through the first quarter of 2025. It showed 8.7 million shares at $408.5 million and then surged to 12.7 million shares worth $630.6 million by December 31st, 2025, a 46% jump in one single quarter. Today's filing adds another 2 million shares to that ledger, pushing the position past the $500 million mark for the third straight quarter. Mubadala manages a global portfolio exceeding $330 billion in assets across technology, healthcare, infrastructure, private equity, as well as public markets, with its mandate centered on generating returns for the Abu Dhabi government while reducing the Emirates' dependence on oil revenues. Bitcoin, accessed through the regulated IBIT structure, has become one of the fund's most visible public market positions. As of the fourth quarter 2024, IBIT was already Mubadala's second largest holding by a wide margin, trailing only a longer-term stake in ARM Holdings. Abu Dhabi's sovereign wealth accumulation does not stop at Mubadala. Al Warda Investments, an entity tied to the Abu Dhabi Investment Council, itself operating under the Mubadala umbrella, has also been building an IBIT position, reporting 8.2 million shares worth approximately $408 million at the end of 2025. The two Abu Dhabi vehicles combined to hold more than $1 billion in IBIT as of the end of last year, marking a milestone for Gulf Cooperation Council sovereign participation in regulated Bitcoin products. The Q1 2026 filing arrives against a backdrop of broader institutional and governmental interest in Bitcoin. Goldman Sachs disclosed approximately $2.36 billion in total crypto exposure through IBIT and other vehicles, while Jane Street reported 20.3 million IBIT shares worth $790 million. On the sovereign front, Texas became the first U.S. state to purchase Bitcoin for a strategic reserve during the same period. And on a similar note, new financial disclosures show that the Trump Family Trust bought shares of several Bitcoin-linked companies, including Coinbase, Mara Holdings, and Strategy, during the first quarter of 2026 as the administration advances a more crypto-friendly policy agenda. The filings revealed thousands of trades worth between $220 million and $750 million overall. Yes, we cannot forget that Texas actually physically bought Bitcoin. I keep forgetting that, and it's hard to remember all this because things in this space move pretty fast. They moved too damn fast for this one crypto ATM operator. Bitcoin Depot files for Chapter 11 bankruptcy, and I'm sad to see them go because I don't like anybody losing their business, but I really do believe that Bitcoin ATMs are it's just too soon, man. Just too soon. Stephen Graves, Decrypt.co, Bitcoin Depot, which is North America's largest Bitcoin ATM operator, filed Chapter 11 bankruptcy protection and shut down its entire network of 9,000 machines. CEO Alex Holmes blamed an increasingly hostile regulatory landscape for the publicly traded company's collapse in a statement, arguing that the regulatory environment for Bitcoin ATM operators has shifted significantly, rendering Bitcoin Depot's business model unsustainable. Quote, states have imposed increasingly stringent compliance obligations, including new transaction limits, and in some jurisdictions, outright restrictions or bans on Bitcoin or BTMs operations. And operators have faced increasing litigation and regulatory enforcement, Holmes said, noting that the crackdown has materially affected Bitcoin Depot's business and financial positions. The company exhausted other alternatives before seeking court protection, Holmes said, explaining that, quote, after evaluating all options, we determined to initiate this court-supervised process to facilitate an orderly wind down of operations and a sale of the company's assets, end quote. The U.S. Bankruptcy Court for the Southern District of Texas will oversee proceedings that include Bitcoin Depot's Canadian entities, with the company expecting to commence separate restructuring proceedings in Canada. Financial pressures had mounted for months before the bankruptcy filing. Bitcoin Depot reported a 49.2% revenue decline year over year for the first quarter of 2026, posting a $9.5 million net loss compared with $12.2 million in net income just 1 year earlier. The company's stock plummeted 79.5% over the past 6 months as investors fled amid regulatory uncertainty. Bitcoin Depot's troubles accelerated after a series of setbacks this year. The firm overhauled its leadership in March 2026, appointing Holmes as CEO after Connecticut suspended its money transmission license. And a month later, the firm revealed that hackers had breached the company's IT systems and stole $3.7 million from its crypto wallets. Oh my God. Bitcoin Depot flashed bankruptcy warnings earlier this month as ATM revenue fell and regulatory scrutiny intensified, while the company's Canadian subsidiary faced ongoing legal battles involving an $18.5 million award dispute. The broader Bitcoin ATM sector has struggled with similar pressures, with Tennessee becoming the second state to outlaw Bitcoin ATMs altogether after the state of Indiana did so in April, while the Canadian government has proposed its own similar ban. All right, so they're talking about regulatory problems as being the issue for their bankruptcy. I just don't, I mean, I think that doesn't help by any stretch of the imagination. That can't help, but I don't think that that's really the reason. I think Bitcoin ATMs, and for that matter, just crypto ATMs, I just think they're too early. I mean, there's not, and in fact, when you really think about it, how many times do you see people at an ATM? The only places that I really see ATMs anymore is at a bank itself, and I never see anyone at it. Or it, like, you know, if your state offers weed, you got to pay in cash because they don't take credit cards because it's, you know, still a federally from a federal government landscape in the United States. It's still classified as a Schedule I narcotic for whatever reason. So banks won't touch it. So you got to have ATMs inside of weed stores. But I see a lot of ATMs, you know, all around, and I never see anyone at them anymore because everybody's just using their credit card. So I don't think that this is really a Bitcoin problem. I think this is just an ATM problem. We really don't need them. There's really not a reason to have them, whether you're dispensing cash or dispensing Bitcoin. It just, I don't see the point. That's what I'm getting at. I can do half this shit, more than half of this shit I can do on my phone. I don't need an ATM. Last time that I personally used an ATM was like 4 months ago. And because it was the only way to buy this particular service at this particular store in the town that I live closest to. So I people that are going to be fudding this say, look, Bitcoin is so unused that they don't even need ATMs. Dude, nobody needs ATMs anymore. But you do need your bank account. And what you don't need to do is attach ChatGPT to it. I'm telling you, man, this is probably going to be bad. ChatGPT can now see your bank account, and here's what that means. Jose Antonio Lanz from decrypt.co. ChatGPT has been giving generic budgeting advice for years. You know the drill. Track your subscriptions, automate your savings, maybe cook at home a little bit more. But some people wanted even more for some reason. If you are one of those people, OpenAI just launched a personal finance feature in ChatGPT that connects to your actual bank accounts and answers money questions based on what you've actually spent, not what the average American spends. It's rolling out to pro subscribers in the United States on web and iOS first. And if you've got OpenAI Pro, that's $200 a month. So if you're like me and you're paying $20, you won't even see this feature, which is fine by me. The feature works through Plaid, the financial data infrastructure that already powers things like Venmo, Robinhood, and thousands of other fintech apps. And once you connect, ChatGPT gets read-only access to your balances, transactions, investments, and liabilities across more than 12,000 financial institutions, including Chase, Fidelity, Schwab, American Express, and Capital One. And I ask the question, as always, what could possibly go wrong? It can't move money, though, or see your full account numbers. It simply reads all of your financial information, thus having the ability to generate a full financial profile of who you are. That's it. Nothing to be afraid of, right? The difference in output is stark. Without your accounts connected, ChatGPT responds to "help me save more," in quotations, with a generic list of suggestions: cut subscriptions, reduce takeout, automate transfers, etc. With your accounts linked, it looks at your last 90 days of actual spending across dining, shopping, and transportation and builds a personalized monthly plan with real dollar targets based on what you've already been spending. If you wanted more personalized advice with the normal ChatGPT, you would have to download your bank statements one by one and feed all of that information, consuming a lot of time. The new feature automatically fetches everything for you. This move didn't come out of nowhere. OpenAI acquired Hiro Finance, or Hiro Finance, just last month. It's a fintech startup that had billed itself as an AI personal CFO. The deal was effectively an acqui-hire, with the Hiro team folding into OpenAI as Hiro's product shut down. It was OpenAI's second fintech acquisition in less than a year, following its earlier pickup of Roy, a personalized investment app. The new tool also sets a financial benchmark of its own. OpenAI worked with over 50 finance professionals to evaluate model performance on complex personal finance tasks. GPT 5.5 Thinking, which is the default model for the finance feature, scored 79 out of 100 on that benchmark. GPT 5.5 Pro, again, available for Pro subscribers, scored 82.5. OpenAI isn't the only one moving. Perplexity recently launched its own Plaid connected finance product, and Intuit is coming to ChatGPT soon, which would enable things like estimating the tax impact of selling stock or getting odds on credit card approval, all inside the chat interface. But why? The obvious question: is it safe to hand this much financial data to a chatbot? Plaid uses bank-level encryption, doesn't store your bank credentials, and has processed over 150 million connections across 12,000 institutions without a major breach. The security layer here is Plaid. The real question is what OpenAI does with your data once it arrives. Quote, your conversations with connected financial accounts follow the same model training settings you choose across ChatGPT, according to the policy. So if you opted out of contributing to model training, then that applies here too. You can also disconnect at any time, and OpenAI says synced data gets deleted from its systems within 30 days. One important caveat OpenAI makes clearly: this is not a financial advisor. It can spot patterns and suggest targets, but it has no fiduciary duty. That is, no legal obligation to act within your best interests. So your screw-ups are yours and yours alone. That's a real limitation that banks and regulators will scrutinize closely as the product expands beyond pro users. OpenAI ran the same playbook with healthcare earlier this year, launching a specialized ChatGPT for clinicians without actually claiming any responsibility for the clinical advice it provides. Personal finance is the next sector in the same pattern. Take a domain where people already use ChatGPT informally, add secure data access, and launch a purpose-built vertical. OpenAI said over 200 million people already ask ChatGPT financial questions every month. The product is just catching up to how people are already using it. The rollout to Plus users comes after OpenAI collects feedback from Pro users. Those without a pricey paid account can always go to the, do-it-yourself route. A powerful Hermes agent with a powerful model. Even better if it's a local model or a privacy-focused provider like Venice or TriMaple. And some manual data feeding should net you roughly similar results. It's less convenient, but at least your data stays your data as far as you know. All right, so all the promises that OpenAI makes about deleting your data, don't believe it. It's not that I know that they're lying, it's that I don't trust them. And I don't think anybody should trust any of these people when they say, oh yeah, after 30 days we delete your data. How do you prove it to me? How do you prove you didn't make a copy? How do you prove any of that? Well, the answer is you can't. Because if you look at it, and when I mean logically, I don't mean that as an off-the-cuff remark. I mean, if you take formal logic as a class in college, like I did, and it's not hard. Formal logic isn't all that. It's like basically it's like addition, subtraction. It's just learning how logic works. Like if A is true and B is also true, then C is also true. If A plus B equals C. If A is true and B is false, C cannot be true. That's that kind of logic. From a formal logic standpoint, you cannot prove a negative. It is impossible. You cannot prove I didn't do it. Well, I can't prove that I didn't delete it or that I did delete it. I can't prove that. Now, sure, I guess if somebody said, hey, I think you murdered somebody, I can like let's say I was halfway across the country and I've got, 50 receipts from my credit card and I was captured on 12 different video cameras in that town at the exact same time, then yeah, you can kind of prove that I wasn't there. But in this particular case, you can't prove that you did not take a copy of someone's data. You cannot prove that you deleted the data. It is impossible to prove. Sure, there's a time. Yes, I see the command. I see the timestamp of the command that said that this file was deleted, but you can't prove that you didn't copy it. You can whatever data that you want to prove to me that you did, you can show me. But what are you not showing me that makes me completely at ease? And the answer is there's nothing you can show me that proves that you deleted my data, that proves that the connection to my bank account is closed, or proves that under no circumstances the LLM would not be able to somehow or another figure out how to transact with money out of my account. Now, I think that's the least likely of all the shit that I talked about, but I'm not going to connect an LLM to my personal bank account. Look, dude, if you really want to do this, if you really want ChatGPT to look at what you spend, dude, just get online, go to your bank account, click on transactions for your whatever account, like your savings account or more likely your checking account. All right. And then copy all that with like the timestamps, like the whole, like you can probably even get it as a download PDF or an Excel file or something, and do it for like the last 3 months or 5 months or 6 months or however long you want. Throw it all in a file and then give that to a ChatGPT or an Anthropic or whatever it is that you want to do. I still think that that's a bad idea, because at that point, how do we know that ChatGPT or OpenAI hasn't just built a full financial profile on you, given your last 5 months, 6 months of financial data? Because I'll bet you the shit you bought in the last 6 months was almost exactly the same shit you bought the 6 months prior. It does not take that much of a snapshot to basically go, he drinks a lot of alcohol, or damn, he smokes a lot of cigarettes. This is not the shit you want to be given over to an LLM. And he eats a lot of red meat, which I would classify that as good. But if you've got somebody examining your account because they want to make your life fucking miserable and they're a vegan, well, that's not going to help you out, is it? Please reconsider giving this kind of shit directly to a frontier model. Go to Try Maple and use theirs, because at least there's some things about secure enclaves. they kind of disentangle your IP addresses from whatever frontier model they're using, and it's just straight up data. At least there's that. And Venice is another one. I don't know if they use secure enclaves, but I know that there's a little bit of disentanglement from your computer's IP address and you as a user to whatever frontier model you're using. It's got its drawbacks, but hey, at least you can disconnect there. Please consider doing that if you really, really are like, man, I'm at the end of my rope, I'm budgeting, I really need something that can look at things in a different way. And please, LLM, please help me at least use TryMaple. I think it's trymaple.ai. And then there's, it's either Venice.chat or Venice.ai. Try one of those and see what you get. So that's all of the news that you can use today. I hope I brought you exactly what you needed to know to get or to start your week up. Please do have a good one. It is shaping up to be a pretty spring for some of the country. My heart goes out to the people in Canyon, Texas, where I used to live for a few years. They are experiencing massive wildfires in the Texas Panhandle. It's not looking good, and it doesn't look like it's going to get any better because we got a super El Nino. But right now, Eastern Washington is really pretty. I mean, I want to be back in Texas, but I can't look out the window and say, yeah, that's not beautiful. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.